Can you guys see my screen?
Yes, sir. Yes, sir. It's visible.
Okay. Hello, everyone. My name is Vivek. I'm one of the guys partnering with Thanesh to launch this network. So I'll briefly talk about what the network is for about 10 minutes, and then I'll hand it over to Thaneshwar to take it forward. So let's start. So introduction. So everybody out here might have the question like, what is this angel investment network, right? So it's basically a network of individual investors with focus on first-time investors, wherein we actually educate them on the pros and cons of angel investing, and we actually provide them pre-vetted deals, as in list of startups which have been vetted by us for investment, in which the investors could invest alongside like-minded individuals. Now, there are a lot of things in here which will become clear as we go on in this presentation. What is the objective of the network, right? Why have we created this network, or why do we want to create this network? There are three major objectives. One is we want to support startups. Right now, there is a lot of startups coming up in India. All of them need support, and every day in paper, you keep newspapers. I think most of us would, see that there are a lot of startups raising money, and there are still a lot of startups which want to raise money, and we want to kind of, support them. And the second is we want to create a community. We want to create a community of like-minded individuals who all want to invest in startups. Who want to get together, discuss ideas and figure out what's the right thing to do and invest. And last but not the least, we actually want to create wealth for our investors. I mean, this is one of the foremost goals of this network, wherein we want to make sure that people who invest with us actually are able to multiply their wealth, and we want to create wealth for the peer members of the network. Now, what's the process, right? Like, how can one become a part of the network? And there are two aspects to it. One is from the investor side, and the other is from the startup side, right? Like, how does an investor become part of the network, and how does startups can approach us, right? So let's start with the investor side of it. So when somebody wants to become part of the network, they typically go and register with us by filling up a form, an online form on our website. After that, what we do is we kind of do some background verification of the member. Why we do this is because we want like-minded individuals. We want people who kind of want to be part of the network, who want to invest in startups, and want to kind of engage with others in doing so. And then after that, once we do that and we accept them, we kind of allocate them membership. And after that, they get invites for pitching sessions. These pitching sessions, I think we want to do it every month, wherein startups come and pitch their ideas. So they'll get invites for these pitching sessions. And they also get documents regarding the startups, information which would provide, which would help them in investing in startups. We help them create, we help investors in creating a shareholders document. We help them kind of with all the legal compliances and stuff. And we also kind of give them monthly reports regarding the startups they have invested in, through which they can just track the progress of their investment and the startup. And this is the investor aspect of it. Now coming to the startups, right? Well, how do startups kind of come to the network? They could approach us directly by going to our website and registering there, or they could probably send an email, or they could be referred by one of the members of the network. And after that, what we do is, from all the startups we have collected over a period of time, which may be like a month or 15 days, we shortlist based on the attractiveness of the idea. And after that, we sit down with the founders and talk to them. We figure out their competency and stuff. And after that, we do due diligence, which is basic due diligence on the startup. We just make sure that, okay, I mean, nothing is out of place. They all, tick the right boxes and stuff. And after that, we kind of allow the startup to pitch in one of the pitching sessions to the investors of the network. And let's say a startup is very attractive and some of the investors have selected the startup for investment. So after the selection, we do detailed due diligence, wherein we actually look at, we engage people. we engage people to go through the startup thoroughly from all aspects of it, right? Like from business plan, product market fit, the financials, the founder's background, their business plan, and the potential of their idea, how they intend to market it. All these things come under detailed due diligence. And finally, the investment, wherein we give them the money. So these are the two kind of aspects, major aspects of how somebody can become a member of the network. And then just a moment. Okay, so and then the membership details, right? Like most of you now also have the question, like what do I need to do to become a member of the network, right? So there are 3 tiers of membership that we are providing. They are silver, gold, and platinum. So when somebody decides to become a silver member, he or she has to commit to invest 1 to 5 lakhs in a year. They have to commit. And then for a silver member, they'll be allowed to take part in startups, or take part in fundraising for startups which want to raise up to 50 lakhs. And then there is the gold tier, wherein investors who are members of this tier will invest 5 to 20 lakhs, commit to invest 5 to 20 lakhs in a year, and they get to participate in fundraising of up to 1 crore. And the last tier, which is the highest, is the platinum tier, where investors commit to invest 20 lakhs and above. And they get to participate in all the startups, right? There is no upper cap on any startup that they want to, any startup that wants to raise 10 crores, they would get access to it. There is no annual subscription fee in any of these tiers for now. The first year, we plan to keep it as free. So just become member of the network and choose your tier and get access to the startups. Now, there would be a lot of questions by now, right? Like, why do I need to become part of the network, right? Why not? I can do it individually outside of the network, right? There are a lot of issues that are addressed by being part of the network. One is we identify the right opportunities for you. As we said, we screen startups before we giving it to the network, right? So there is a lot of effort that goes in making sure that all the startups tick the right boxes, they're doing good and stuff, which is a good idea, right? So that we provide to the network beforehand, and we validate the business model. There is a lot of effort that goes into validating business models, and we do that for the investors. Again, we make sure that the data and numbers provided by the startups are valid. It is actually what they are talking, the founders are talking, and those things. And we also make sure all legal compliances are taken care of. As I said, there's a lot of paperwork involved when somebody decides that they want to invest in a startup, and we take care of that. And let's say an investor invests in 10 startups, we actually provide them every month progress of like a weekly report, which contains progress of the startups, which helps them in tracking the progress. Otherwise, if they do it out of the network, they would have to seek out the progress reports from the startups, and there's a lot more effort involved. And trust issues, right? When you're part of a community and you're investing, there is more trust in it, because there are 10 more or 20 more individuals along with you who are also investing, and it just increases the trust factor there. And also, since we are keeping everything transparent, as I'll talk about in the further slides, it is kind of more trustable than you doing it on your own. And then what about the growth of your investment, right? So what are the growth factors? Right now, there is government policy support for startups in India. Government is formulating policies, a lot of policies that is aiding in creation of startups, in funding of startups. The government wants startups to solve a lot of problems that people in India are facing. They want startups to create competitive products and compete with global companies. So there is a lot of government policy support as well as financial support from the government. There is a fund of funds created by government. I think around the layout is around 10,000 crores or something, which could be tapped by startups to kind of grow, to fund themselves and grow. And this is like an indirect benefit, wherein a lot of bad businesses have been clamped down recently by the government. So whatever you're investing, you can kind of reasonably sure that they are good, which increases your chances of success. And then the other thing is again digital transactions, wherein whatever we do in this network is all digital and they can be tracked and they're all transparent, which again increases the trust factor here. And then very good thing is exit at global valuations. Like a lot of startups now do not only list in India, they list abroad, Singapore, New York Stock Exchange, Nasdaq, and other things, which means you can get exits at global valuations, which is fantastic, right? Which could multiply your investment manifold. And then again, there's a lot of investor interest in investing in startups. I can say it's a tipping point for fund inflow. There's a lot of fund inflow into startups, which means startups get to raise multiple rounds of funding if they are good, which means there is higher chance of you multiplying your money, right? And lastly, again, like why do I need to invest in startups now, right? So it's like, let's take an analogy: stock market and cryptocurrency. On individually. So in the early 1990s and 2000s in India, investing in stock market was not very attractive, right? People had trust issues. People were not sure what to do, how to do it. They were not sure whether they could make money and stuff. Now, imagine how it is now, right? A lot of people want to get into stock market, right? There is a lot of retail participation in stock market, Indian stock market. And that's why Zerodha is a unicorn, right? A lot of people have created account on Zerodha and making money. So what I want to bring your attention to is, if you enter early, if you catch the bus early, you're going to reap the rewards later. So similarly with cryptocurrency, right? Crypto right now is very volatile. There's a lot of trust issues. People are not sure. They don't understand it fully. They don't know whether they'll make money or not. So, but whoever are the early investors, right? Whoever are putting in money now, I'm sure they're going to reap the rewards later, right? So they're catching the bus early. So later, when people want to get in, by that time it would have gone, risen, or given a lot of rewards, and people who get in late would miss all those rewards. So I would say similarly, the startup ecosystem in India is at that stage wherein there is a lot of interest now and it is taking off. This is the right time to actually invest in the Indian startup ecosystem and Indian startups, wherein whoever enters now will make a lot of money later. And with that, I can end my presentation and I'll hand it over to Mr. Thaneshwar. It's up to you, buddy.
Thanks a lot. Thanks a lot for your effort, Vivek. Really appreciate it. And time has come for which we all been waiting for, right? The panel. So I will just introduce you to the panel member, and hope they've been waiting for quite some time. So I would like to welcome Subrata. So Subrata, can you please all the panelists turn on their camera if possible?
Hi, Thanesh.
Hi. So Subrata, he's managing partner of IdeaCapital, and he's I know him from quite some time now. So I know him from the time he was been an entrepreneur, right? So now he's an investor. So thanks a lot, Subrata, for joining us. And now I would want you to talk to Sukriti. Sukriti, she has been part with us from quite some time, from the days of Ientra. She has been working with Let's Venture, Lead Angels, and now she is part of Social Alpha, and she has done a lot of deals. All right. Hi, Sukriti. I welcome you.
Hi, Thanesh. Thanks for the lovely introduction. Sorry for not turning on the video. As I mentioned that, my cousin's laptop is conked off and I've given my desktop because its exams are going on. But yeah, I'll get back at 7, so I might turn it on then.
Sure. Thanks a lot, Sukriti. Now, Jennifer Hopp. So Jennifer Hopp is managing partner of Atiba Ventures, and she's joining us from Puerto Rico. Sorry for bothering you at such an early morning.
No, it's fine. Good morning. Good evening.
Thanks a lot, Jennifer. And now Swapnil. Swapnil is part of Cumulative Ventures. So I got introduced to him through one of the activities from Axel Partners, and he's very active. He's been mentored for one of the startups, and he's really helpful. And hope his mentorship can help other startups as well as the investors. And he's a CFA, so he's Chief Financial Analyst. So we can look for a lot of inputs from him. Thanks a lot, Swapnil, for joining us.
Thanks, Thaneshwar, for a lovely introduction. Look
Thank you.
forward to working with you.
Thanks a lot, Swapnil. So to begin with, so I have few questions in my mind, so which I had charted down. So I promise you, the next 1 hour going to be very interesting, and people who have joined in, they're going to have value for their money. So to begin with, I would want to go. It's a common question which I'm going to ask. So one by one. So what are the challenges and opportunities are there for investors? Right. So to begin with, maybe Subrata, can you start? So what do you think the challenges and opportunities for the investors?
So hi, good evening, everyone. This is Subrata here, as Thanesh nicely introduced me. Thanks for the opportunity as well. Of course, I think we are talking about the venture capital investment primarily, right? And if you see other kinds of investment that's happening as well in real estate, right? I think it's down. You cannot really invest in gold. That's not giving good returns. So you have only limited options, right? I think startup is one of the good options, lucrative options that investors find very, very interesting, right? So that's basically the opportunity, I would say, because you can increase your investment manifold, right? And of course, it doesn't come without challenges. Now, the challenges are basically where do you invest, right? Which kind of startup you invest, right? I think that's where this kind of network sort of helps, right? To figure out what kind of startups you should pick up. And angel investing is not only money, but also your expertise that you sort of bring onto the table, right? So it should be a kind of perfect matchmaking in terms of investment and startup. And then, obviously there is a burst rate, right? Not every startup sort of, is able to give you the return, good return, right? So how do you sort of strategize your portfolio? So this kind of couple of, challenges, I would say, that investors should be aware of to start with.
Thank you, Subrata. So may I just go to Jennifer Hopp now? Do you want me to tell the question again, Jennifer?
I'm sorry, I didn't quite hear you. What did you say?
Do you want me to repeat the question?
Sure. If you want me to answer the same question in terms of
Yes,
just
please.
opportunities in angel investing in general or in India?
Yes, challenges and opportunities in investing in general.
Yeah. So I think just as was said, I think that sometimes you have to look at what's available and what's volatile and what's going on in the market. And with angel investing, one thing we always know is if you can pick the startups correctly, and that's something we'll talk about, they're always going to go up, right? So early stage investing always outperforms if you look at the data globally. So if you get in early enough with a startup that does well, obviously the returns are very high. The opposite side of that is it's also very risky and it's difficult to choose which startups to go into. And I know we'll talk about that in depth along the course of the evening. But it's also why I think it's really important for people who want to get involved as an angel investor, as a first-time investor, especially to join an angel group or invest through an early stage fund or something like that, because the risk is high, because it is just so difficult to determine which of the, if you take a random 100 startups, which of those are going to be the 3 to 5 that actually do very well. So the opportunities are great, the risks are high, but there are ways to mitigate those risks.
Thank you, Jennifer. Thank you for your inputs. Now let's move to Swapnil. So it's the same question, Swapnil. Can you please answer what are the challenges and opportunities we have for the investors?
Yeah, opportunities, as Subrata and Jennifer both mentioned, that there are huge opportunities, right? So India is currently a $3 trillion economy, and in let's say next 10 to 15 years, it's going to become a $10 trillion opportunity. and the investment, it has to expand to 7 trillion more, right? So listed equities are going to be minuscule percentage of it. As we have grown, the traditional asset classes like gold, real estate will not see the great amount of growth. So it has to be alternate asset class, either in the form of angel investing or in the form of venture debt, so on and so forth, right? But the again question is how to identify those opportunities. So the idea is you have to be a part of network, because it is individually very difficult to assess and invest in startups and scale it up to a great length. So it is always advisable that you be a part of network and network with right kind of people, like-minded people, so that you get access to opportunity. And it's always said that globally, as Jennifer rightly said, that if you be a part of startup early in the space, like I'll give you example, Anupam Mittal, who had invested about a crore or a crore and a half in Ola in a span of 5 to 7 years, 7 years if I'm not wrong, if my memory serves me right. He had made almost exit of about 125 crore plus. So it's 100x, but obviously it has a survivorship bias as well. Because if you have one unicorn, then there would be at least 100 to 200 startups who have not reached or who have not seen the light of the day. So you have to network with right kind of people and be a part of network. And through that network, if you be early in the startup ecosystem, that would really be helpful.
Thanks a lot, Swapnil. Sukriti, the same question to you.
Sure, Thanesh. So I agree with all my fellow, panelists, and I completely agree that there are actually 4 fundamental pillars that is involved for any startup ecosystem around the world. That is entrepreneurs, startups, investors, and internet penetration. Unfortunately, India is growing positively on all 4 fronts. And over the past decade, we have seen the startup ecosystem has boomed, and we have seen a very inclusive entrepreneurial environment. So it's of little surprise that India's startup landscape is touted to be the 3rd largest in the world, and hence it's a great opportunity for an investor at this time to be a part of the ecosystem and invest. But definitely there are certain opportunities as well as challenges when it comes to the early stage financing in India, because as rightly mentioned by Subrata, that finding great companies is definitely challenging at an early stage, because startups are high risk and high return investment, and it does follow the power of law. But the toughest part here is that finding the investable startups, you need to have the access to the top tier of deals that can actually give you the huge hits. So to be a part of angel networks or to be a part of collaborating with other lead investors or VC firms, I think that's a one way you can be a part of the ecosystem and aware like what's happening. Second, I think it's more on the portfolio growth and the support. So sometimes what we have seen with very active investors, they maybe if they are not part of the group, it becomes very difficult for them to track and monitor the performance of the portfolio, and what is actually the company is performing, or wherever they have invested, whether they are on track or monitor. But being associated with any group, I think they notify on a monthly basis or on a quarterly basis. That's what I think Vivek mentioned, and that's what Ientra is also planning to do and take care of the post-transaction support. Third, I think there have been some policy issues on the capital gain tax and the other regulations, which I think, there is a need to work on that part, because we are trying to create an ecosystem where we are promoting early stage investments, and hence there's some relaxation also on the tax part of it, or say the regulations that are inhibiting the innovations. So yeah, in terms of opportunities, I think it's apparent that the startups are actually bringing a solution to the real problems, and we've recently seen the business models which are more sustainable and scalable in nature, and hence their chances of becoming successful is high. And during COVID, the startups also made India Atmanirbhar, and the world is now looking at India. So there are a lot of innovative innovative solutions that is actually addressing real world problems. People are building local solutions where the market is huge. At an early stage, your valuation number is not so high, and hence at a very small ticket size, you can actually have a substantial stake in the company. And it also gives you a chance to be a part of the startup's journey. So it's not just as an early stage investor, you are providing finance to the support to the startup, but also you are adding value through your experience and expertise, and contributing to the growth of the startup.
Thanks a lot, Sukriti. So I think we'll go in the reverse order. Sukriti, I'll put the question to you again. So how important is the role of an angel investor and angel network in the startup ecosystem?
It is very crucial, and as I mentioned that it's a good idea to invest in startups when one has the appetite and the capacity for high risk involved, but if an investor is a part of an angel network, I think all the initial filtration part or say the curation of these companies are already done by the network. So one can actually think of supporting these businesses that have the higher chances of winning this game. So else it depends on the bandwidth of the investors also, if they want to do it on their individual basis. So one must be capable of creating a significantly sized portfolio of investments in the hope that some of the investments are part of that percentage that's going to give them a huge return. And I think angel networks does give them opportunities that have a diverse, option of startups across sector, and hence they are diversifying the portfolio also. And the angel networks, I think, do also help them in getting their exit, because unless or until an exit is realized or the investors are not getting an exit, I think that's what the success of any startup investment is. And angel groups negotiate the best terms for their investors, just to make sure that they are protecting their rights, and contribute a lot in that success of this whole process, whether it's from gaining the access to the startups, making them invest, negotiating the deal terms, helping them in the portfolio management, etc.
Thanks a lot, Sukriti. So I think the same question goes to Swapnil. So how important is the role of an angel investors or angel network in the startup ecosystem?
So I'll divide it into two parts. First, I'll talk about angel investors, because the role of angel investor becomes very crucial, because they are mostly, or 99% of the time, are the first investors apart from founders themselves and friends and family who are validating the ideas. So they're playing a very important role in terms of believing in the founder's vision. Second point is angel network. So as an individual, we have always been advised that if it is not your full-time job to do angel investment, you should not do it on your own, because it is very cumbersome process to curate the startup and invest. And once you invest, that is a half job done. You need to closely monitor the portfolio and exit, so that whatever money that you think you have made on paper actually comes to your bank account. So angel networks plays a very important role in curating the startups and giving it to you on platter, and also on the post portfolio monitoring activities. And second thing is that angel network would help in terms of diversification. So let's say if I have to allocate, let's say, 1 crore of rupees, and if I do it on my own, I might get carried away by investing, let's say, 20-25 lakh in one startup, and that might not scale to a great extent. But if I'm part of angel network, I can diversify my portfolio and start with, let's say, 5 or 10 lakh rupees per opportunity, and then scale it up if they are seeing the second round, third round, so on and so forth. So both the key pillars play a very important role in a startup's journey. Where first, these guys are the very first investors who are backing them up and sharing the same vision, and angel network in terms of post portfolio monitoring and exits.
Thank you, Swapnil. So Jennifer, again, coming back to you, the same question. So how important is the role of an angel investors in the angel network in the startup ecosystem?
I'm sorry, you're very muffled for me. You're saying how important are they?
Yeah, angel networks and angel investors in the startup ecosystem.
Yeah, so first, and it's hard because everyone's saying, the precise right thing to say, and that is, if it's not your full-time job, don't try to do it alone. And that's, I think, the key importance with these angel networks is that, and I don't have a lot of really anything more to say other than to just re-emphasize that it's incredibly important that you have someone who is applying a methodology that you agree with in terms of vetting the startups. You can do it on your own, and that's fine, and I've done that. But you have to understand that if you're going to invest in startups on your own, you've got to have a different reason other than just financial returns, right? There's a lot of great reasons. You like the founders, you want to support them, it gets you into a network that you want to participate in, but you have to think, okay, I'm going to put this $10,000 or however much into this company, and getting it back is a bonus, right? Because the chances of you getting it back, having not done some sort of methodology and vetting them, is slim to none. And so when you do those investments on your own, you've really got to have, in my opinion, a reason other than financial returns for making that investment. When you go through an angel group who is telling you, like Ientra is, that they're going to take the time to vet them, they have a process, they have a screen, they're going to weed out the ones that aren't ready, then you could be confident that, yes, you're also going to potentially making money. So you might still invest because you like the founder, or you want to be a part of this group, or you like the industry and it's a great way for you to learn about the industry. So there's still other reasons to invest as an angel through the angel group, but you also have the opportunity to make money that it's really hard to do on your own. So that's, I think, the benefit of the angel group. I think angels in general are just a critical component for startups. It's that early financing that really is helping them to get to a stage where they're ready for additional funding if they need it to climb the curve, or to start hitting their stride and making more revenue, so that they can grow. Without it, it's nearly impossible for these founders, no matter how great their idea is, to really come up the curve and go into mainstream. They need those marketing dollars, even if it's, so we may learn later on in this discussion, depending on where the questions go, my methodology and my philosophy. And I put my founders through a very rigorous validation and verification process before I let them build anything. Right? I want them to really make sure that the market exists for their idea before they spend any time and money building anything. But even in that model, at some point, you need money to go to market, and those early dollars that are critical to the success of the startup, and those generally come from angel groups, high net worth individuals, and that kind of thing before you get into institutional investing.
Thank you, Jennifer. Thank you for your inputs. Subrata, over to you. The same questions.
Yeah, sure. I think a lot has been said already, right? Let me sort of emphasize on a couple of points. I think angel investing is not only money, it's always money plus something, right? Something is expertise, insights, mentorship, right? And I have seen, smart founders sort of engage with angel investors strategically, right? So let's say they lack in business development, they lack in go-to-market, right? Or a little bit of operational aspect, right? So they sort of filter and choose angel investors. So obviously they are presented with a pool of angel investors, right? Let's say from your network. So what they do, they would typically sort of, go through their background, right? And pick and choose strategic angel investors given their background, their expertise, right? And then have a deep dive call. So I suggest they have at least 1 hour call, right? If not multiple 1 hour calls. And then sort of come to a conclusion that whether that person, that angel investor is good for your business or not. And similarly, I think in the minds of angel investor, I think the similar things also play, right? Whether this founder or these founders sort of, are okay for your kind of expertise, right? I think we are looking about a small amount of money, right? not really too much of money when you're talking about the syndication, right? So the money can come easily, relatively speaking, but then the expertise, whether you can really, fall back on their insights when your business sort of need those insights, right? I think that's something which is very, very important. And you cannot really do it on your own, right? As the founder or co-founder, because you are kind of pulled in different directions, right? You need to sort of run your business. But typically, if you sort of, devote 50-60% of your time when you're sort of actively raising fund, I think you should be sort of, looking at an angel network to sort of give you those inputs, right? A pool of angel investors. You can also sort of, have a talk beforehand that, I would like to sort of get in touch with this kind of investors, right? Not the other kinds. I think those kind of strategic things, for the very first 1 or 2 meetings, I think it also helps, if you sort of fall back on a network like yours, right? And then I think the fundraising process can be more effective, more efficient, right? It can happen. I have seen it can happen just over a week or 10 days if there is something which is good going, right, on both the fronts. So overall, I think angel investing and the role of angel network, I think it's very, very important in shaping the success stories of very early stage startups, right, who are looking to raise funds.
Yeah, thanks a lot, Subrata. So now moving on, we're going to have individual questions. So in case if you have any specific questions which you have to ask to any of the panelists, please use the chat bar and you can type your questions and the same thing will be answered at the end of the session. Thank you. So moving on to Swapnil. Since you are a CFA and you do a lot of valuations, right? So I just wanted to understand one of the most common questions investors have is, how do you evaluate a startup at such an early stage?
So valuation of startup is $1 million question. So because in early stage, it's more about art than a science, because there are no numbers to back, there are no EBITDAs, there are no cash flows. So ideally, all the traditional methods of investing or valuation, like discounted cash flow, EBITDA multiples, revenue multiples, price to earning, all this will not suit in terms of early stage. So you have to look at innovative ideas or thoughts to value a company. So that could be either you see whether what are the similar transactions that have happened in the space, if it is not the first transaction, or what are the comparables if you are not finding it within the geography where you are investing, if any outside geography that have some similar transaction. And if that is a kind of disrupted market where there are no transaction, you are the first one to write a check, then you can look at some unit economics or some methods wherein you can envisage that, let's say if I have to exit, let's say after 3 to 5 years, and my exit valuation should be this, and then probably because you want to exit at this multiple and you have to invest today, let's say 5 years before, then what should be the ballpark range that you should look at, apart from looking at the future projection and all? Because future projection, I consider it as a GIGO method, which is garbage in, garbage out. If you don't do sensitivity and other stuff, it will really not helpful in terms of arriving at a proper value of a startup.
Thank you, Swapnil. So now let's go back to Sukriti. Sukriti, like you have been worked with Let's Venture, Lead Angels, and Social Alpha. Interestingly, all of them are specialized in early funding. So as an investor, so what do you expect from the startups in terms of growth and returns?
So in terms of growth or returns, I would say, see, there are a number of variables that go into analyzing the potential of any early stage investment opportunity. And I would say there is no such tool which can actually estimate returns of early stage venture investments, or even if there is a tool like this, there is no way, I think, to know what your actual returns will be, because venture investing is highly speculative and there is no real liquidity. But that's also what what makes venture investing fun. So trying to find those gems where the company is made up of few people working out of the founder's home is part of excitement, and that startup concept can be incredible. But in order to hit a home run, or you say you need a brilliant execution and a well-timed product and a market that is hungry for the product or services. So I would say it does yield a very favorable return. We know that the wealth creation out by investing in startup, it's unparalleled. But we need to also understand that, in like track the growth in terms of maybe month on month or year on year. So as rightly said that, investing in startup is more of an art and less of a science. It's actually meant for everyone, and it is not actually meant for everyone, and it's subjective. So we need to look through those lenses, but it's extremely risky and conditional. And if it done right by even looking after all the metrics and the variables, it requires a lot of support, and it's not just the capital that goes into the success of a startup. So I would say in the end, the beauty of early stage investment is a merger of head and heart. Yeah.
Thanks a lot, Sukriti. So now coming back to Jennifer. So Jennifer, I just wanted to understand, what are the commonalities between the two ecosystems, which we can see in India and the one which we can see in Puerto Rico?
Yeah, I'd be happy to talk about this. It's interesting because you think of India and Puerto Rico and immediately you don't think of a whole lot of similarities, right? You literally have 1 billion more people than we do. It's a tiny, Puerto Rico is a tiny island in the middle of the Caribbean. We only have a population of about 3 million people total. The island itself is 100 miles by 35 miles. So it's a really small community. So you're thinking, how in the world does this have anything to do with what's going on in India? And the way I like to think about it and how I understand it, you can correct me if I'm wrong, is that we are a small community among a large, fairly developed community, right? So Puerto Rico is a territory of the United States. And even though we've got Silicon Valley and a lot of well-developed startup ecosystems in the US, in Puerto Rico, it's very much an emerging market. It's a startup and technology ecosystem is just growing. It's only a few years old. And the amount of activity and excitement we see here is incredible, right? We're getting more and more founders. People are coming over. We actually have an influx of capital as well because of the tax incentives. And this is actually something I didn't realize. And when Sukriti mentioned it, I think that there's actually something else we can learn from each other. And one thing that Puerto Rico has done well is created tax advantages where we don't. It's the only place in the US where you don't have to pay capital gains taxes. And so it's now attracting a lot of high net worth individuals and investment funds to the island. So now we're having an influx of capital along with this emerging market of startup and technology. And so while India as a whole is huge and has a lot of well-developed areas, I would imagine that within there are small communities that are themselves emerging markets where startups are just beginning to take hold. One thing that I've noticed, and I mentioned this to you, Thaneshwar, is that in my experience working with people from India over the last 10 years, I've seen a shift in this mentality from being kind of a technology employee, a tech worker, to being a founder. And we see that here as well. If you look over history, I mean, the kids in Puerto Rico were kind of taught that your goal was to get a job with a big corporation. That was your goal. And now they're kind of seeing that differently. And they're saying, you know what, I could build a big corporation. So they're just starting to understand that entrepreneurship is a thing for them. And I'm seeing that there's probably some similarities within smaller communities in India, and we can learn from each other in that way. And so that's one of the things that I find exciting working with you, is learning from each other as we look at how these emerging groups are going to grow and how we can support the entrepreneurs who, a lot of whom, most of whom are first-time entrepreneurs, right? And are going to need a lot of support. And as everyone else has said, they need more than just the capital. They need the business experience. They need the the parenting. I call the kids in my incubator kids, even though some of them are in their 40s, right? Because they, in this regard, they are like kids and they need a lot of help and support. So I see those as being the main similarities between our ecosystems.
Thanks a lot, Jennifer. Thanks a lot for the wonderful input. And moving on to Subrata. So as we all talked about, how important is the money and parenting and things like that. So since, as I told in the beginning, you were an entrepreneur, right? So I just wanted to understand how important is the seed funding in the entrepreneur's point of view.
So seed funding could potentially mean everything to an entrepreneur, right? Particularly early stage, very early stage founder, co-founder. But the fact of the matter is, when you don't need money, seed funding, it comes to you, and vice versa, right? I think that's the reality. So one has to understand this. So from startups point of view, I think while it is very, very important, but try to learn how to sort of live without it, how to sort of run your operations even without it, right? Even if it doesn't come or sort of it kind of gets delayed, right? Try to see if you can sort of, bootstrap it further, try to get money from your friends and families, a little more money if possible. And for the investors, right? Although you sort of didn't ask me that part, let me sort of add a flavor to it. I think I would suggest that I would recommend that, don't sort of, nitpick on really the merits of the business, right? It's a very early stage thing, right? Of course, you need to sort of, talk to your fellow investors, try to understand the overall sense of it. Can they sort of raise further rounds? I think those broad spectrums that you should look at, and then just put in money. Anyway, you are going to sort of, build a portfolio, right? I think if you have a fairly good amount of success in your portfolio, I think your job is well done. So yeah, that would be my sort of recommendations for both entrepreneurs and angel investors.
Yeah, thanks a lot, Subrata. So now coming back to Swapnil. So one question which I would want to ask, like as an investor, how long one should stay invested in a startup and what type of returns can they expect? Because that's something which most of the investors would be interested in. So how long they have to stay and what kind of returns can they expect?
Interesting question. Now all investment related questions are probably coming to me because of the course I did or the stature I hold in terms of angel investing. So I personally, well, it is a subjective question again, how long you would want to wait, right? And if you see that company is performing and there is a valuation going up every time, right? And the business is doing good. The first and foremost thing is business should do good in terms of unit economics, so on and so forth. So, but ideal time at a portfolio level, if we comprise of, then the what you can say, the duration could be at least 3 to 5 years. It is not a short term because as we have already mentioned that these are not liquid investments. And if the company is doing good, it's a catch-22 situation. If the company is doing good, why do you want to exit? And if the company is not doing good, you will not get an exit. So, and in terms of expectation of returns, ideally at a portfolio level, you should expect anything between 25 to 50% as a CAGR for the period that you hold, about 3 to 5 years. That is because there are some portfolio companies that will give you multiple X, but there are some portfolio company that will just do an average, and there are some portfolio companies that you have to write it off. So it has to be the typical VC community that follow 80-20 rule, that 20% of your portfolio should cover at least more than 100% of your return while you look at the portfolio level. Because we cannot determine at an individual level that everyone wants their company, all their companies to be unicorn, right? But which is aspiration, but that is not possible in the logical world. Then for that you have to be extraordinarily lucky that whatever you touch becomes gold.
Thank you, Lord Swapnil. So now coming to Sukriti. As an investor, what are the key metrics that you use for a decision-making process selection?
So I think key metrics remain standard across, all the investors, because in the end, we all want the company to succeed. But primarily at an early stage, I think if mainstream investors are considering an opportunity, they follow triple T, rule, that is team, traction, and target market size. Whereas for impact investors, they follow the triple P rule, where there is an angle to planet. So it's planet, people, and profit. So I think there are some broad metrics that, or say the guiding principles that influences the selection of startups in general. I think number one that can be considered and is technology and innovation, maybe because that creates a defensibility to the solution or the product, and also help in driving the the larger scale, and also creates an impact. Second is obviously team. Team is the most important part, because investors they don't invest in ideas at an early stage, rather they invest in founding startup. So if the team is definitely strong, it helps gives that conviction to an investor. Because what we have seen during the COVID times also, that there have been certain headwinds to some sectors, but the strong startup teams were able to pivot it, and had a backup plans, and they came, the resilience and the way they came out was commendable. The other factors we definitely consider is financial sustainability and operational scalability, because how the business model actually seek to sustain itself after some years, despite after raising few rounds of funding, and how they're trying to scale it to the other geographies and the other market. So overall, I think we evaluate them in understanding if the company is going to sustain and scale after a few years, and also to understand if the company will be able to provide an exit after 5 or 7 years of time horizon.
Thank you, Sukriti. Now moving back to Subrata. Subrata, since I've always been telling, coming back to the same thing, I transitioned from an entrepreneur to an investor. So what actually motivated you to become an investor? So, how it feels like, switching your roles.
So it was a dispassionate decision, right, to become an investor, not really a passionate one. But somewhere, I think I always wanted to become a VC. I remember when I was writing my business school application, so you need to write answer to few questions, right? 4 or 5 questions that you need to write. I think that was probably 15, 20 years ago. And I wrote that I wanted to become a VC, and that to a senior position in a VC firm. And they obviously outrightly rejected my applications, because they said, at this level, you cannot become a senior, like a partner level person in a VC firm. But the point is that somewhere it was there deep inside me, right? I think entrepreneurship and investment can coexist, and they should coexist at some point. I know many VCs come from management consulting background, with due regards to that as well. I think, if you understand the entrepreneurship quite well, I think it sort of adds to your profession, right? Because most of the time what you're doing, even if you're at a very senior level, senior partner, general partner, managing partner level, you need to spend some time, talking to the entrepreneurs, right? And maybe your team has already sort of spoken with, and the due diligence is happening, but I think you still need to sort of have a understanding what this business is all about, right? And at some point, you might want to sort of get in touch with the, entrepreneurs, in making your final decision, right? So in that regard, I think, if you have an entrepreneurial background, it kind of serves you better, I would say. It's not a necessary condition, but if you have it, I think it sort of adds to it, as I said before. So in my case, which is not obviously very distinct, right? I think many of us who became VC, I think have sort of, gone through the entrepreneurial journey, right? I ran my startup for about 3.5 years. I was running startup in AIoT, artificial intelligence and IoT space, right? So that was interesting. And then I wanted to see the other side of the table. And as I told you that it was somewhere in my mind, in deep inside me, I wanted to add value to the ecosystem, right? Want to become the part of their success stories as well, right? And the entrepreneurship, I think in formal sense, I was obviously a founder, right? When I was running my startup. But if you see my career trajectory, before that, I obviously worked in various corporations. I think Jennifer also sort of alluded to it, that there's a big shift. For my case, it was very, very different though. I worked for Intel and Parker Hannifin, and in both those cases, right, I kind of joined the team when the team was being formed, right? So I had to sort of, work from the ground up. So in other words, I kind of, worked as an entrepreneur inside a corporate setting, right? So that kind of, put me in a position where I could take the entrepreneurial journey with great sense of satisfaction.
Thank you, Subrata. So now coming to Jennifer. It's a very interesting question, Jennifer. So as an entrepreneur, when we go anywhere, right? So there are two things which most of the VCs would ask. So what is your traction and validation, right? So these are the two important things. But importantly, when you invest, so you invest very early. You invest in an idea stage where they don't even have an MVP or a market. So what do you think? So what are the odds of success when you invest so early in the start?
Yeah, so we, as you said, we go in extremely early. We go in before launch, so there is no traction. And when we get involved with a startup, they generally don't even have a website, and that's the way I like it. So, and I'll tell you why. Most of these startups are going to fail. We've talked about that. There's a million reasons why. But one of the biggest reasons is this lack of product market fit. When you say there's no market, that's kind of what we mean. There aren't enough people to purchase the item or the product or the service or whatever it is at a sustainable level, right? At a price that will keep the company growing. And so when that happens, we say there is no market or there is no product market fit. And that happens so often, right? That what we like to do is come in before they even launch. So the way most investors handle that is exactly what you say. You kind of sit back and wait and see if the startup gets over that hump, if they actually can prove out that there's a market. And when they do, and when they have traction, they say, okay, come talk to me. Now I'm interested. But what we like to do at ATO Ventures, which stands for Against the Odds, is that we go in before launch and help them make sure there's a market before they run down the wrong path. So we actually want to talk to these startups before they take their seed capital and go running in the wrong direction. And so we go through what we call a market validation process. So we put a small amount of capital into a company. In the US, it tends to be between 10 or 20,000 up to maybe 50,000, depending on what market they're in. And that money is earmarked for market validation testing. So we are working with them for 3 to 6 months, just doing a very rigorous testing process. And it's because of what you said, right? The odds of success at that stage are slim to none, unless you've got a very, well, in our case, like I said, a rigorous process for validating what's going on. So there are a million other reasons why the startup might fail, even if they have a great market, but we're going to take out this one, which tends to be about 60% of the failure. When you look at startups that get funding and launch, about 60% of the failures are due to this no market, lack of market fit. And so we're going to try to get rid of at least that. So we take them through this very rigorous process. We're very hands-on. We're working with them. We have outside companies and consultants doing the testing, making sure that there's actually a market, even before they have an MVP. We don't want them to have spent a lot of time and money building something until we know for sure that what they think is true about their market is. Once we're able to prove that out, we're actually capturing paying customers in what looks to be a scalable, reachable market. Then we put in another chunk of cash, usually about $250,000, to then finish out the MVP and launch. And so that's how we mitigate our early investment risk.
Thanks a lot, Jennifer. So coming back to Swapnil. So can you please tell us about the criteria you look into for considering investment in a startup? So what criteria should you look in a startup to consider investing in them?
Right. I just small request, if somebody is not speaking, I think background there is some noise. Yeah, better. So there are 2, 3 criteria that we look at predominantly, apart from looking at the business model and going into details about business plan and all. So first is about team, how passionate the team is, how experienced the team is, whether they share a common vision or not. So we try and talk to founders. Let's say if there are more than one founder, we try and talk to them separately as to whether they have shared vision or not. And the third and most important thing in the team we see is whether they are able to listen or not, whether they are coachable enough in terms of, if we suggest some idea, not necessarily they have to implement all the time, but yeah, whether they are coachable or not. These are the 3, 4 points we consider while evaluating a team. Then we shift to business model, whether what is the value proposition, whether they are solving a real problem, and what are the unit economics. If at all in the early days you are not making good money, but yeah, what is the go-to market strategy that you are trying to follow, which will help you scale as well as move to a positive unit economics. And the third and most important thing in business model that we do is how easy or difficult it is to replicate the startup. Why? Because now everyone, because thanks to technology, there are no borders involved with the business model. So Cred want to do lending, P2P, Flipkarts wants to do private label, retail, everything. So everyone is going into each other's domain. So how easy or difficult it is to replicate a startup is one of the very key parameter that we look at in the business model. And then we see what has been the target market that they can address, whether it is a niche market of, let's say, $100 million or a $10 million, vis-a-vis a large market in terms of $5 to $10 billion. Whether they'll be able to scale to that or not is a separate thing, but how large is the market in terms of addressability? And if at all they are playing in a niche market, are they creating any particular segment? Like when Mama Earth and other cosmetic startup that have come up, at that time there were very few people who were going into the, what you can say, chemical free and all this for kids. So these are 3, 4 important criteria that we look at while evaluating a startup.
Thank you, Swapnil. So coming back to Sukriti, can you please tell us what are the typical process during the angel investment round?
Sure, Tanesh. So if I talk about purely from an angel network, given my experience, at lead angels and, working even with social alpha, I think the standard process typically involves few steps, which is like once we receive the deal, and the way we evaluate the companies are that there are certain mandatory variables, or say the metrics a startup has to qualify as, maybe say on a prima facie level, before the conversation with the analyst kicks off. So on those variables, some of the network actually follows that the company or the startup at least should have initial traction or early customers, because those give them a confidence, and there is something tangible that actually adds, give conviction to these early stage investors to write a check. So, one is that prima facie discussions, or say the filtration happens. Once it gives us a confidence that we want to pursue it further, then a detailed due diligence analysis goes into the picture, and there we start doing the evaluation in a more rigorous manner, to understand more about the technology, understand about what the company business plan is, what's the market size, whether this company has a potential to grow or not. And once that DD comes up and it does not have a major red flag, and that's where it's being presented to the overall network. So the deal is being showcased to the network to understand their thoughts and opinions, and a call for commitment is rolled out, and there is a window where the call for money has to to be recorded, and post which the angel group and the network actually take care of the paperwork that involves during the transaction.
Thank you, Sukriti. So coming to Subrata, like, is there a specific skill as an angel investors one should have, or to be more specific, who can be an angel investor? Like, these are the questions which, because most of the first-time investors will be asking. So, can I be an angel investor, or what kind of skills I should have?
I think anyone can be, an angel investor, right? As I think Swapnil also mentioned early on, that it's a different asset class and very lucrative asset class, right? So if you want to sort of multiply your investment rather quickly, of course there is some risk associated with it, but if you are willing to hedge that risk, I think anybody who is sort of educated and have some understanding, has some understanding with regards to how startup works, I think can be an angel investor, right? And the characteristic, I think you also asked that what sort of characteristic one should have, right? I think let me sort of diversify on this a little bit, right? So this is not only to the angel investor, but the VC in general, right? So in PE scenario, right, private equity scenario, you tell your investing company or the management, the leadership team, what to do. You sort of direct them. But in VC space, you tell what not to do, right? So there's a difference because you partner with them. I think if you can play that game, I think you are better off. I think that's, to me, the single most important skill as a VC, or even an angel investor should possess. What sort of tell them what not to do, your investing company, right? Because you can't really tell them what to do. Right? I think that's something, if you practice, have some deliberate practice thing, I think you will pick it up over a period of time.
Thank you, Subrata. So, Jennifer, this question is for you. So, do you think investing early is more rewarding than investing in the early stages of the startup?
Do I think that investing early is more rewarding?
Yes. Is it more rewarding than investing in the later stage of the startup?
Well, I think it goes back to what your goal is. And for me, it definitely is. And that's because I think it's been alluded to, if not said directly, there's more to it than just capital. So if you're looking to actually get involved, you feel like you've got some area of expertise that can be beneficial. You want to get involved with the startup. You want to help see them grow. You want to be part of their story. There's a lot of different reasons why angels do this, right? Then I think that is very rewarding. It's not to say that you can't sit on a board of a late stage company, but your impact is going to be much smaller on a relative scale, usually. And so if your goal is to get in early and to really help this company off the ground, then in that case, it's definitely more rewarding. For me, it's early stage is really all I know. I feel like that's what I'm good at. I'm not good at the growth stage. So I won't join a company on a board or an advisor if they're at that growth stage, because that's not what I'm good at. I'm very good at validating markets, identifying revenue models, vetting those out, getting off the ground. That's like my one area of expertise. So it happens to match well with these early stage companies. So I think that you have to know what your motivation is, why you're doing it. If it's just to make money, then write your checks, let the angel investor angel group take care of it. But if there's something else that you're looking for, then you've got to match the startups to that. And it was said, like, I think in the very first question, you're matching your skills to their needs and vice versa, depending on what you want to get out of it.
Thank you, Jennifer. So since you are talking about the matching skills and it's not just money, so my next question is to Swapnil. So as an angel investor, apart from money, how can you contribute to them?
So, Thaneshwar, extremely sorry. I just stepped out of office for some personal work, so I'll be on audio. I'll not switch on my video. So, as an angel investor, or rather early one who is sharing the vision with founder, I would say you can help in multiple ways. You can be a helping hand to them till the time they achieve a scale and size. But the more important thing as an angel investor you should mind is it is their vision, it is not your vision. So your network, your opening up of network, opening up some doors for first few customers, obviously would help them, and these are standard things that you can help them with in terms of scaling up size and team. So you can help them in building up the team, evaluating as to what type of technology you should have while to scale up, what type of software you should use to monitor and scale up the team. But one very important thing which I have obviously seen over a period of time, that you should maintain a distance between their vision and your vision, because you are at the end of the day investor, right? You might be thinking better for them in terms of, but it should not what you can say mean to them that you are involving in too many decisions, right? Small decisions you should allow them to take it and let them fall and learn how to run a business. And somewhere where you can guide, where you can be the guiding force, you should obviously help them. So the only advice to upcoming angel investor is that you should maintain a distance in terms of, well, it should not feel that you are in what you can say encroaching in their territory.
Thank you, Swapnil. So now my next question is to Sukriti. So which sectors are attracting investment currently, and what stages do you usually like to invest in an organization, and what is the funding modality?
Sure. So Tanish, I feel 2021 is promising for the consumer internet space, which could also see some consolidation, because what we have seen that how technology is transforming the lives of ordinary citizen through the power of maybe digital literacy, payments, or any other thing that's actually impact their welfare measure. So I think sector-wise, fintech, edtech, health tech, biotech will likely to attract the bulk of investments. And because with the adoption of these digital platforms, what we have seen is that more users are coming online, and the companies needed to spend less on consumer acquisition. So the CAC has gone low. Whereas we are definitely hoping that there is some consolidation that happens even in the edtech space, because there's so many companies, and when the schools are opening up, the students might not want to retain a lot of subscription on that part. So yes, it's definitely promising for technology enabled startups. Yeah.
Thank you. So going to Subrata. So what exit strategies can you recommend for angel investors?
So exit strategies, right? I think one thing you should ensure whether the startup that you are planning to invest in has ability to raise further rounds, right? Maybe pre-seed, seed, pre-series A. I think that's something you should ensure, because that is the fastest way to sort of take an exit, right? And of course, you should also see if you want to sort of stay invested for a longer period of time, let's say 3 years, 4 years time frame, when most of the M&As happen, right? And I think one of the things that you should also sort of look out for, whether this startup has the flexibility to go towards the M&A path, right? I know many startups sort of start with the vision that we want to build an institution. While that's perfectly fine, but I think startups should also sort of realize the fact that you should opt for M&A if right kind of opportunity sort of comes through, right? So that's another way. So I would say any angel investor planning to sort of invest small amount of money in a startup, stay in for about 3 years or so, and I think you can get your exit. It's obviously not set in stone, but you could take exit early also. But I think 3 to 4 years is something, statistically speaking, is a good time for you to take your return if you're sort of really looking to get some returns back to you.
Thank you, Subrata. So my next question goes to Jennifer. So as we are running out of time, so this will be one of the last specific question. So talk about startup investing as a diversification strategy for investors in their portfolio.
Yeah, so it's interesting because for those of us who've been investing in startups for 20 years, like literally I've been doing this for a really long time, I have to look beyond. So for me, it's not diversified. For me, it's like highly concentrated. But for most people, especially if you're new to angel investing, this is an incredible way to diversify because you're looking at different time horizons. And what was just said in terms of liquidity, I find to be actually kind of early. So 3 to 5 years of being, in my experience, aggressive in getting a return, but there are ways to do it. And I think probably in different communities and environments, you get those returns differently. You can also, the secondary markets are starting to really grow. So there are ways to get out of your investment earlier now that there weren't before. Before you'd invest and you'd be lucky, 7 to 10 years was kind of the time horizon. And through a fund, if you invest through a fund, which I actually recommend you do, and I'll be talking to you about Thaneshwar because I think you should start one. And I know that you've been thinking about that a little bit too, but if you invest through early stage funds, then again, your time horizon is longer. It's like a 10-year time horizon. So you can think about it as this is, high risk, high reward, but if you give it time, this is going to be your retirement fund, right? This is the capital that you count on coming in, down the line. It's not the capital, not the cash flow that you live on. And so while you're thinking about your portfolio structure, you have your investments that are going to return and spit off capital for over time, the interest and the dividends over shorter periods of time. But at least in traditional venture capital, which is the way most angel funds run, right? So they're doing investments in the very same structure as early stage venture capital most of the time. And we could talk about that because I think there's opportunity to do different structured deals. But when you're doing those equity deals, it's going to be longer term. And so as you're building out your portfolio, you want to think about the risk and reward, but also the time horizon. And so I see angel investing as an opportunity for a longer term life. That being said, I think that there are some opportunities for structuring things in a non-traditional venture capital method where we are looking at royalties and demand dividends and credit interest types of things, which will match better for a large percentage of the startups for whom they aren't necessarily going to be these a billion-dollar company, which is what venture capital is good for. Venture capital is good for companies that we suspect will go to the moon. But there are a lot of great, sustainable, potentially profitable companies that don't need that model. And so there are other ways in which you can invest as an angel to support those companies and get quicker returns, smaller returns, but faster returns.
Thank you, Jennifer. So thanks a lot. So before we move into Q&A session, so I have just one question where what is that one advice you would give for the aspiring angel investors? Just one advice. So before we can move into the Q&A session. So Subrata.
Yeah, let me see. So one advice, right? So if you have some surplus cash, put it in this asset class, right? Interesting asset class, and don't really try to spend too much of time. Talk to the angel network that you're working with, and talk to the founders. Obviously, take a couple of meetings at least, and then talk to your fellow investors, right? And then take a plunge very quickly.
Sukriti.
Yeah, Thanesh. So I think if you're beginning the investments, you might need to first speak to founders and understand like how the business model actually work and functions, and then invest it through networks, because there are high chances that the filtration and the curation has happened through them, and then diversify your portfolio rather than putting all the eggs in one basket. Just try to understand and diversify in different sectors, because as I mentioned earlier, investments does follow the power of law. It's not about the number of hits you have, but the magnitude of that hits, and you might get the returns out of maybe just top 2 portfolio of yours. So yes, you should definitely invest if you have the risk appetite. So it's a question of when you're starting this journey of investments, whether do you have the appetite for it, how much corpus you are keeping it aside for the startups, what sort of engagement you will going to have, whether you have a bandwidth to actually monitor and engage with the founders, and accordingly take a decision. But yes, first do a bit of research and then take a call wisely.
Thank you, Sukriti. Swapnil, so what is your one advice?
So my genuine one advice, because there are multiple ones, but I have to pick the best one, then it is to understand, obviously, founder has done his homework, he has created a plan, made a plan to present you to seek investment while you are doing early stage investments. Just believe in his story and do a certain extent of what you can say, understand it from his perspective. Because as an early stage founder, he might be hustling it with multiple things at same point in time, right? So if the design of presentation or the thought process in terms of creating a business plan has not been well laid out, give him some benefit of doubt in terms of the way he was asking him to settle across multiple things. Because as a founder, their primary responsibilities are to raise funds, manage businesses, show conviction to team, share the common vision, multiple other things he's hustling with, right? So give some leeway to founders in early stages at least. Once they reach a scale and size, you might not give them leeway because they're answerable to investors, right? At the end of the day.
Thank you, Swapnil. So Jennifer, over to you. What is one advice?
Just one. Okay, so for first-time angel investors, I think the most important thing is that you don't try to make a decision on your own. You definitely need to be looking over the shoulder of an early stage venture capitalist who's doing this full time, or as we're talking today, this angel network. If it's something that you want to be able to do on your own going down the line, I would say still shadow someone, ask the network why they've made the decisions they have, ask them to walk you through the process, the vetting process, and just learn from those who have done it before. Even if you've got a lot of experience in business, even if you're an entrepreneur who's done it before, there's just nuances in the angel investing space that you don't learn until you've done it over and over again. So that would be my suggestion is don't try to do it yourself. Team up with your buddies in the angel network and make decisions together.
Thank you, Jennifer. So there is a question from Mr. Ram Deshpande. So he has the question is how to choose right network and how performance of a network is measured. I think Sukriti, you can answer this.
Yeah, well, I don't know if there is a direct answer or a perfect rule to choose a network, but you can definitely go through the portfolio and understand their performance, understand how the structure of that network is defined or they have outlined it, just to understand if they are actually offering you something that is adding value to your investment journey. Suppose a network which is actually which does not want to be very aggressive in nature, but whatever they are proposing to you as an investor is well curated and have chances to grow, at least that has been filtered, and the proposal actually is of high quality. Second, you also need to, maybe you can consider looking at what are your chances of growing in that network in a way, your engagement with a portfolio company, how they actually track or manage the portfolio management, and speak maybe to some of their investors who are already a part of that network, so that you get a confidence before you actually officially be a part of that network.
So any other panelists would like to add any point to this? Subrata, you have any point?
Yeah, I think Sukriti said it all, but let me sort of highlight just one quick point. So maybe you should talk to the founders of the investee companies, and try to see what their opinions are, right, about this network, right? I think that you should do before you sort of try to give a rating about it.
Okay, thank you. So anything Swapnil and Jennifer would like to add before we wind up?
Yeah, I'll add one quick thing, and I think that it goes back to just like anything. It's what are your goals, right? So it's a little bit of you can vet the network, look at their track record, look at their portfolios, talk to the founders, and all of those things are great. But what I found in reality, right? There's do as I say, and then not as I do. In reality, every network that I've joined, it's come down to I like the people and I like hanging around with them and I like having discussions with them. And so I think it goes back to what is your goal? What is your purpose for joining this fund? Is it just to do investments, or is it to build your network? Is it to get involved? Is it to expand your community? So I think that those things are important. You're going to potentially be spending some time with these people, and you want to join a group that serves your purpose. And so that could be different depending on what you're looking for. You may have one angel group that you join that you're not really that interested in the topics that come up during dinner, but you like the investment opportunity, so you do it just solely for investment. Whereas you have other angel groups that you're really involved because you like what they're doing in the community, you like to see their deal flow. So I think that it just depends on what your purpose for joining is, and there could be multiple networks that you join for different reasons.
Right. And one last point I would like to add, and apart from all the points have been covered by my fellow panelists, but the one thing that we probably should check, because of thanks to technology, that you try and find out from your network if somebody is already a member to it. So that obviously tracking a portfolio and all will help you. But if you have a first-hand view of members as to how the curation is there, how the pitch event works, and
Okay. Thank you, Swapnil. Thank you for your input. So if anybody have any question, we have just 1 minute. Please let us know. We can take one last question, or else we are going for the time gaming. So anybody have any question, please, you can unmute and you can ask. And if you have anything to any particular panelist, you can do the same. Fine. Okay. Let's move on to the thanking session. And I'm really thankful to Jennifer, Subrata, Sukriti, and Swapnil for taking time out of your busy schedule and made yourself available. I know there was a lot of challenges you had to go through, but you made sure that you were here. All right. And I'm really thankful to all the participants who were here. And I would like to thank my colleagues, Vivek and Jaros. And I would like to thank Muruga Nandan sir and ICC Council to be there. And before we just wind up, since I'm also an entrepreneur, so I just wanted to tell how important an angel investment is. There was a time when being an entrepreneur, I was struggling, and there is an angel who he is an angel. It's not just an investor; he is an angel himself. So who came and he just didn't put money. So along with money, he just made sure how we operate. He changed how we operate, and the only thing he would wanted is he would wanted me at peace, so that I can concentrate on business rather than worrying about where my next money is going to come for next expenses, or how am I going to do the cash burn. So he's with me and he's there and helping in all the daily operation. And to be honest, he's someone who don't want his name to be taken anywhere. So I'm really thankful to you. So I take this opportunity, since we're talking about angels. So one angel investor. So Being an angel, it's not just money, right? There are a lot of things which they put. They are like your foster parents, like, right? So they also treat your company as your own baby at some point of time. So I would suggest all the entrepreneurs who are there. So it's okay, you might not succeed, but what I would always suggest you is just make sure you put your sincere efforts, because that's what they all want, to put your right efforts. So whatever happens next is not in our hand, but certainly the one thing they don't want to see is you take their money and you don't work, right? So just make sure you do justice to all their trust and money, whatever they're put in, paid. And that's the thing. I just want to wrap up this session. Thanks everyone. Thanks everyone for coming again and taking time out of your busy schedule. And that's it from me. Thank you once again.
Thanks, Thanesh. Thanks, everyone.
Thank you, Thanesh. Thanks, everyone. Have a lovely evening.
Thank you, Thaneshwar sir, and thank you every panel members. Thank you, and the participants also.